All right, Josh, we are live here on YouTube, and maybe tell us a little bit about where you are today, sir.
Well, I'm at the JW Marriott in Anaheim. It's going to be day four of the Great Disneyland Adventure 2025. So, um, yeah, maybe we'll do an episode later on how much it costs for a Canadian to actually visit Disneyland. But for now, I hear our you know our leaders that be have got plans to completely abolish taxes, right? That's kind of what they're claiming, right? The major tax cuts, as they're calling it.
Massive tax cuts coming down the pipe, I promise. Pinky swear.
Massive tax cuts, right? And so, I saw the headlines when I was down here, and of course, the devil's in the details. But let's get into the one announcement from the conservatives, because first of all, there was an announcement by Carney on what he was going to do with his tax cuts, and then it was, you know, the response on X was, you know, uh, Poilievre dropped the bomb and taught Carney a political lesson in taxes, and it was Poilievre to cut income tax by 15% for the average Canadian.
Um,
15%. That that was the headline. That was the headline. But let me like break that down for you. 15%. What that means is they were planning Poilievre's great plan to make life affordable in Canada again. Houses trading at 16 times median income, but their great plan was to cut taxes, cut the first marginal rate by 15%. So the first marginal rate is also 15%, and they were going to cut that by 15%. And so instead of having a 15% first marginal rate, you're going to have a marginal rate of 12.75%. So 12.75%. And now let's understand how the tax system works here is, for the most part, most people are not going to pay any income tax on the first 16,000 bucks. Okay. I'm going to round off the numbers to make it a little more palatable for those listening, but pretty much the first $16,000 are tax free because of the basic personal amount. And then everything up from 16,000 until 57,000 approximately is at the first marginal rate on the federal side, which is 15%. Now that's just the federal portion. And there's different provincial taxes in every province, but just the federal portion. Okay, so Carney was going to reduce it from 15% to 14%. And Poilievre is going to reduce it from 15% to 12.75%. But we all need a bit of a lesson on how the tax system works here. So, once you see those great headlines, and those headlines morph too when they're going, because the headlines are, taxes are getting cut by 15%, right? And it's like, not really, people. This is how it actually works. So we post this usually every year. We have to go back a little while to the Instagram channel in August of 2024, and break it down for the average family.
All right, I'm going to the Instagram now. There we go. You're on your
And
phone there, is
and
that correct?
Yeah, and this is the one we talked about. So, like, income tax is only one of the taxes that we pay. Okay. So we pay income tax, and we pay payroll tax, and we pay sales tax, and we pay property tax, and there's tax on every, item, profit tax on every item that we buy from a taxable business. And like, I know some people say, I don't pay that directly, so it doesn't exist. But like, trust me, like our corporate overlords are not absorbing that on their own. They're passing that on to you. We pay taxes on liquor and tobacco. We pay taxes on fuel. We pay, other excise taxes, and our great carbon tax. And what does that amount to? It means that the average Canadian, the average household on 109K of income is paying 43% in tax. And so you start breaking that down on what those taxes are we're going to save. It's like, instead of 43% on the liberal plan with the tax cuts, let's just say you had a two income household and you were each going to get the that 1% on basically the difference between 16,000 and 57,000. And so, roughly 400 bucks. And if if you're a two income household, maybe you get $800. Okay. So you get yourself to $800, and like, what are you talking about? Instead of 43% tax, you're actually paying 42%. And the major bombshell that the conservatives released, that it was a political mass. I heard someone describe it as a political masterclass to release that second was, it works out to the 2.25% on the first bracket is going to work out to, $800 per Canadian. As a reference point, I think my dinner last night cost $800 at one of the fancy steakhouses, but like the average Canadian is going to be $800. That's what they're going to get. That's what they're going to get off in a two-income household. Actually, no, sorry, it's $900. So little cheaper than my dinner. Sorry, I overstated the cost of dinner at a steakhouse near Disneyland. So instead of that, you get $1,800 as a family. So basically, what that means, people, is that if you elect the Liberals, maybe your tax rate is going to go down from 43% to 42%. And if you elect the Conservatives, your actual tax rate is going to go down from 43% to 41%. And that was the major bombshell that they dropped. So these are the campaign messages. And it's, where I tell people, like, it doesn't really matter who you vote for these days in 2025 with how indebted, westernized governments are. It's like it's becoming less and less important, because the system is ruled by the bankers, and so the deviation between those two plans is minuscule. That the average Canadian is going to go from paying 43% tax to either 42 or 41 when you start looking at the different layers of taxation wound into there. And that's the actual brass tax of it all, right? And so when you hear 15% tax cut, it's like, that's not off the aggregate. It's just off the very first tax bracket on the personal side, on the federal side. And so, Trevor, do you think the average person was kind of thinking about that when they heard it?
No, but it's good for people to really break it down and help them understand that, it sounds really good, sounds amazing. Wow, 15%, that's crazy. When really, at the end of the day, you may be able to save up to $800 for the whole year. So break that down, it's not a whole lot per day. What is that? A couple bucks a day, not a lot, right? So, people just be smart when you're voting out there. That's the only thing that I can say is just be smart. That pick the lesser of two evils, I guess, and go from there. That we have another probably 25, 26 days left to go in this. No more than that. Anyways, a long ways to go. A lot of runway until we reach the end point and the election day. But like you said, at the end of the day, the bankers are the ones who are primarily in control. And, if we just imagine this, if we actually elect a banker to be the head of state in Canada, how screwed are we going to be then?
I mean, I, I was starting to take the unpopular position that, and this is where like 80% of the viewers might say, what the heck is this guy talking about? It's like, it actually doesn't matter that much anymore that the bankers are in charge anyways. And I'm going to give you an example. The UK tried a more aggressive tax cut in 2022. And so what they did was they were going to basically take their income tax on the first tax bracket, similar to us, from £12,000 to £50,000. They're going to take it down from 20% to 19%. Let's look at this whole tax packet. So that sounds very similar to, Carney's first step in the plan. And this is in 2022. Then they were going to scrap their 1.25% increase on their national insurance. And crudely speaking, let's equate their national insurance to our EI and CPP. It's basically a payroll tax. Okay, but it's a 1.25%. Like that it sounds small, 1.25%, but that one was actually going to be about £300 for the average worker. So those payroll taxes really add up. And you can see it from the previous chart that we put up too. Then they were going to reduce their corporate taxes from 25% to 19%. And they were going to increase the exemption on stamp duty tax. So land, people in, people in some parts of the country would know it as land transfer tax, right? And
Mhm.
so basically they had an exemption of the first £125,000 on the sale of a property. They were going to increase that to £250,000. And for first time buyers, it was £300,000, and they were going to increase that to £425,000. As that's the exemption before the land transfer tax, or the stamp duty tax, as they like to call it, kicks in. And then the big one is they were actually going to reduce the top marginal rate. So on anyone who makes more than £150,000, they were going to decrease from 45% to 40%. Those five things, those were more broad-based tax measures. And some people would say, like, well, I want the more broad-based measure. That's what it was. And they combined it with, $60 billion of stimulus, or they called it energy supports, because of, the action in Ukraine. So does that sound like a lot like, several $1 billion because of tariff supports, right? Tariff supports.
Yeah.
And what happened when the UK government did that, Trevor, is like, so people would say they should go further. This thing needs to go further. What happens when a broke government gives massive tax cuts and injects massive stimulus?
Ooh,
Their
man.
bond market crashed. The bond market crashed. And so it wasn't the person that you elected who made that decision. It was the bond traders and the bankers and the insurers. The central bank had to step in and start buying those bonds. The bond market crashed. And so what happened is they had 10-year yields. They went up from 3.5% to 4.5%. That was the single biggest, weekly increase ever. They had 30-year yields at over 5%. The pound had a 37-year low against the US dollar. And so it was over. They had a new prime minister because of that whole debacle. And so,
And
you know,
who was the guy in charge of the Bank of England at that time?
he wasn't. Carney was gone at that point. So that was 2022. He
Mhm.
was gone at that point, right? And that's where, like, the person in charge at that time really had not much choice but to step in and start buying the bonds. And so they actually had to step in and start buying the bonds, because the government, and on how heavily indebted they are, they can't afford to have interest rates going to 10, 15, 20%. It's like, that's hello Venezuela, hello Turkey, hello Iran. Like that's kind of what happens when it goes to that. So they stepped in and start buying the bonds, and they had a new election and they had to reverse course. And so those of you who are asking, you're wondering why those two policies are so similar. It's because you're kind of boxed in by the monetary system, and for all of the political wrangling that they can do, it's like they only have, you have to understand that these are entities that have no plan to balance the budgets. So they're totally dependent on being able to sell that debt, to be able to finance that debt. And as soon as the market tells them, I don't want to finance the debt, it doesn't matter who you voted for. They have no way to pay for that. There's just no way to pay for that. And so people are wondering, like, why didn't the conservatives? First of all, you have to come to the realization that both of those plans from Carney and Poilievre, as much as you might not like to admit it, they're within a stone's throw of each other on tax cuts. And if you were asking for something wildly different, you have to understand that the market wouldn't accept it anyways. The market would be unlikely to accept it. You could have the same, bond crisis, central bank intervention, and new election because of it. And so that is just the reality, is that you're not voting your way out of the monetary system. That's the point. Like, you can't vote your way out of this monetary system. You just have to understand how this thing is rigged. And and can you imagine that both of these guys are proposing these tax cuts without any way to pay for them, but somehow the expert advisors down at the RPC want you to put 40% of your net worth into these bond products that are like, it's just like, come on, people. It's like this is the system that we're living in. And so what the real objective of what you have to do is you just have to educate yourself. It's like, these are the rules of the game. It's not whether the elections in 25 days or 2.5 years, it's like the difference between either party is going to be, the rhetoric is going to increase as if they're wildly different, and their policies are going to converge because they're just boxed in by monetary policy. And that's like, that's the hard truth. And it's not a popular truth, but it's just the reality that we have, right? And so the what the average person has to do, they have to educate themselves on the expansion of the money supply and what assets are you actually going to hold, how you're going to hold them to truly reduce tax. Because if you know what assets to hold, holding appreciated assets lets you increase your net worth with 0% tax, no tax whatsoever. And that should be the goal all along.
Yeah. And maybe we'll talk about it when you get back, but there's been an increase to the amount that I think seniors can put into their TFSAs. That's promised by Poilievre. So you can put more into your TFSA, and especially if you invest in Canadian stocks and Canadian businesses. So that's another thing we can talk about when you get back to Canada. And guess what? You're going to come back to about 2 feet of snow.
I heard people were abandoning their cars on the Cornell Bridge, and like
Yeah.
it's like, come on, guys, what are we, Vancouver? You guys get the right tires? Like, what happened? Like, geez, like that's embarrassing, Edmonton. Come on.
They were too ambitious and took the winter tires off a little too soon.
Oh man. But hopefully it's a little nicer here today for the last couple days, and maybe it'll warm up by the time I get there on Sunday night. So
All right, man. Okay, take care. Thanks so much. See you again
talk
next
to you
time.
later. Okay, bye bye.